Today was another big day in the precious metals. And you know, that sharp correction is quickly becoming a distant memory at this point. Gold was up about $70 today, but it was up $100 on Monday. So as I am recording this podcast on Wednesday evening, gold is back at 4,200. In fact, it did trade above that earlier today. In fact, gold was only higher than it is right now on 5 days in history, right? This was before the correction. Silver, on the other hand, has had an even bigger comeback. It was up better than $2 an ounce today. It actually traded above 53.50 intraday. It backed off a little bit. We're at 53.31 right now, but we're only about $1 below the record high. The highest silver got in that initial run a few weeks ago was 54.40. We came less than $1 away from that today. In fact, so for all the people that were talking about the end of the bull market, there's only been one day that we've had a higher price. Yet despite that, there are plenty of silver stocks that are still in bear market territory. I looked at a couple of big ones today that were down. I think you're down about 30% in Coeur d'Alene from the high, about 20% in Endeavor Silver, about 10% in Pan American Silver. The only silver stock that I noticed that made a new high, because it was up 8% today, was Hecla Mining. But the fact that so many silver stocks are basically in bear markets when silver is trading at the second highest price that it's ever traded, it just shows you how quickly the sentiment soured just on a sell-off. And remember, silver got down to about $46 and change at the low. And now we're back up to 53 plus. And as I said, 50 is no longer the resistance. I mentioned that on the podcast I did on Friday when I just got back from the New Orleans conference, and I mentioned that there wasn't a lot of exuberism there. But it was tempered, and there was a lot of people that were worried about a bigger correction, a lot of people talking about taking profits. And what I was saying was the mistake that people are going to make in this bull market is taking profits too soon. Now, sure, traders, you could have sold and bought back these gold stocks. They did have a big enough pullback. In fact, you could still buy back if you got out right at the top. But most people aren't going to get back in. They're going to get out and, they'll be waiting for a bigger correction. The corrections are generally very swift. Maybe they're shallow and they're over with. A lot of people who probably bailed out aren't back in yet. And the next thing they know, we're going to be at record highs. Now, certainly in the metals themselves. I mean, silver can easily hit a new record high this week. Gold, is a little bit further from its high. Gold still has a couple of $100 to go because gold, I think, almost hit 5,400. So we need a bigger rally in gold than we do in silver. But they're both likely to make new highs. The end of the government shutdown. I mean, I mentioned that on the last podcast that it looked like it was getting likely that the shutdown would end. And by Monday morning, it was pretty much a done deal. And that was really the catalyst for the $100 rise in the price of gold. $100 plus was the end of the government shutdown. Now, a lot of people might have thought intuitively, well, wouldn't that be bad for gold? I mean, wasn't gold going up because the government shutdown was bad for the economy? It was creating uncertainty, and that was benefiting gold. And so that once that uncertainty was behind us, once the government reopened and that was good for the economy, that would hurt gold. That's what a lot of people might have thought. But the opposite happened because the government reopening isn't bad for gold. It's the government staying open that's bad for gold. Because when the government is open, it's doing bad stuff. It's spending a lot of money. It's borrowing a lot of money. It's printing a lot of money. The problem with the shutdown was we didn't shut down enough government. Maybe if we shut down a lot more government, that might have been bad for gold. But the fact of the matter is, it's business as usual in Washington, D.C., and that's good for gold because it means the reckless spending is going to continue, the money printing is going to continue, and so inflation is going to get worse, the dollar is ultimately going to crack, and all of this is bullish for gold and bullish for silver. But the bigger risk is that this blows a bigger hole in the balance sheets of all of the lenders. So much so that they may need bailouts from this alone. You may have to have a Federal Reserve bailout of lenders. Now, of course, if all these mortgages are guaranteed by Fannie and Freddie, that also hurts the value of Fannie and Freddie because Fannie and Freddie has to guarantee these mortgages for the next 30 years. And even worse, of course, separately, if they have 50-year mortgages, and those are portable and assumable over a 50-year time horizon. But forgetting about the 50-year mortgages, all those 30-year mortgages that have 25 years left on them or whatever, that Fannie and Freddie guarantees right now, all of those mortgages will become significantly more risky if they're assumable and portable. That means that Fannie and Freddie are on the hook for much greater potential losses on these mortgages, which means the U.S. taxpayer, of course, is on the hook right now with the guarantee. But all these things that they're doing, they're trying to loosen the reins. They're trying to make it easier for people to borrow money, to overpay for homes, lower their monthly mortgage payments, get rid of the FICO scores. All of this is designed to keep air from coming out of the housing bubble. And so I know that they obviously are getting desperate, coming up with all these gimmicks, but I don't know how many of them they're actually going to implement. But in the meantime, just talking about all this stuff should be very nervous. I don't know why the banks, those stocks aren't really going down. The financials are doing all right now. Fannie and Freddie have gone down. Tech stocks are going down. Crypto is going down. But this is all dangerous stuff for the financial sector. But all this is great for gold and silver because what is all this easy money, lower, lax lending standards? This is all going to be more inflation. It's going to lead to more quantitative easing, money printing, a weaker dollar, right? All of this is bullish for gold and silver. That's why the prices are going up, right? And that's why they're going to keep going up. And in the meantime, the markets have not reacted. They're still shell-shocked from that correction. And they haven't realized, like I just said, silver was only higher than it is right now on one day. And it was barely higher. Yet you have all these stocks that are in bear markets because of that, right? So it's not going to be long. All those silver stocks, I think, are going to make new highs. Gold stocks, some of them have made new highs. Barrick Gold made a new high. Their earnings came out on Monday. Again, blowout earnings, record revenue, raised the dividend. The stock's up about maybe 13% in the last 3 days. And it's at a new high, so it took out its high. I noticed I Am Gold, another stock we have even in our value fund. That stock hit a new record high today, or I don't know if it's a record going back, but 52-week high. So some of these stocks have taken out their highs, but the vast majority of stocks are still significantly below where they were when gold and silver prices were not that much higher than they are right now. But it's just that fear entered the market, and it's just taking a little bit of time for that to, go away. People have a memory of that. But again, that's what the markets are doing. They're trying to check the enthusiasm. They're trying to prevent people from getting too long, too leveraged by introducing some two-way risk in the market, right? It's not going to go up every day, but you got to be smart enough to recognize that this is a massive bull market. This is early, and any downturn is simply an opportunity to add to your positions. That's it. And yeah, I mean, you don't need to lever up. If you're going to lever up at all, you got to wait for the flush out. You got to wait for the big drop if you're going to do something on margin, right? Don't chase the market like that. But yeah, if you get a big pullback, you could take advantage of the fact that other people are getting chased out of this market. So again, the gold stocks are great investments. I think my gold fund, the Europe Pacific Gold Fund, EPGIX is the no load symbol. Buy that. And there are some smaller gold stocks too, some even smaller than the ones we buy in my gold fund. All this hot money comes out of crypto and then it comes out of AI, right? All this stuff, all these bubbles are going to deflate. Where is that money going to go? I think it's going to go into mining. I mean, I think that that's the real story because there's actually tremendous value in that sector, but there's also going to be momentum. And so the people who are looking for momentum, that's where they're going to go. Except now the momentum is real because it's based on actual earnings and actual earnings that are going to grow substantially. Look, oil was down almost $2 a barrel today. I mean, these mining companies are just laughing all the way to the bank. Their costs are collapsing. Oil is, the biggest cost they have other than labor, and their labor costs aren't even really rising that much because normally when gold and silver prices are this strong, the dollar would be tanking against the Canadian dollar or the Australian dollar or the South African rand or the Brazilian real or any of these currencies. But it's not, right? The dollar's not tanking. Just gold is soaring. So their labor costs are in check. Their energy costs are low at $58 oil and $4,200 gold. I mean, that is a huge differential. So the blowout earnings that we saw from Barrick, that's just going to continue. Not just for Barrick, but everybody, this company. And Wall Street is going to sit up and take notice. And you still got plenty of opportunity to buy these stocks.